you have to be careful what you believe nowadays in this day of AI. And so I'll ask you a quick question, maybe just a quick hands up. Who believes this image is real or whether it's actually AI generated? Hands up with those who think it's AI generated. Quite a few. And real? Is that the rest of you? And a few in between. Well, believe it or not, that's actually the Las Vegas sphere. And it's actually a real photograph. And this is the dome that they built in Vegas a few years ago, nearly $2 billion worth. And that is covered in 1.2 million light-emitting diodes, LEDs. And high-purity alumina, which I'm going to talk to you about today, is an integral part of an LED and also semiconductors that are actually being used increasingly in the AI sector. And so it is a poorly known but very important part of the energy transition and the AI transition that we're going through at the moment. This is native alumina, aluminium oxide. It's called corundum, for those of you who are geologists or material scientists, one of the hardest substances known to man and certainly thermally and chemically inert. With chrome and iron and titanium impurities in it, it turns into blue sapphire and red ruby. So that's what we're talking about. And we believe that we've got one of the cheapest, lowest cost producers of this material globally. So, and the reason for that is that this is our Lake Hope project. This is what I'm talking to you about today. And amazingly enough, in the top 2 metres of that salt lake, which is about 500 kilometres east of Perth, there's something in the order of 15 to 20 US billion dollars worth of alumina waiting to be dug up and converted into high purity alumina for uses across the globe. We have the right to earn 80% of this project by completing a pre-feasibility study, which is the focus of all of our work at the moment, and we had a great announcement out this morning on the progress of that, and that's on schedule to be completed by the end of this year, and as I say, we'll own 80% of the project at that particular time. Now, I believe that this project is a world-class project, and I've been quoted before as saying, when I was a young man, first came to Australia from England, from Imperial College. Well, first of all, they didn't use enough sunscreen, so if some of you are wondering what's gone on with my ear here, I had something nasty cut out of it last week, and the great unravelling will occur later this week, so hopefully that's taken. And my ears stick out enough as it is, and I discovered that my mother used to stick them back with sellotape, so when I was a young kid. Anyway, so I can hear clearly going forward. So when I first came to Australia, I learned very quickly in my career, because I worked for Western Mining Corporation, drawing boxes on maps where we believed that world-class deposits existed. And so over time, and I drew boxes on maps for other companies as a consultant, and in Impact, drawing boxes on our own maps to discover a world-class deposit. And I truly believe that it's actually not worth getting out of bed for anything less. There's too many two-mine companies around with market caps in the $150 to $200 million range that struggle to break out of that. If you look at big exploration successes like recently Azure, $1 billion market cap. We've had De Grey, $1 billion market cap, a few others that have got to those levels without turning a sod of earth. And that's really what Impact was set up to do all those years ago when we listed, and we believe now that we're onto that. And the reason it's world-class is because of the economics. So in the business, we talk about a benchmark production rate of 10,000 tonnes per annum of high-purity alumina, and we'll talk about that a little bit. But the big number here is actually the NPV, which is $1.3 billion. And I asked myself, do people actually know what net present value means? It actually means that's the value of the material in the ground right now, and it's been discounted for future inflation, etc. So if someone was to come along and say to me, I want to buy that off you right now, how big's the cheque? The cheque is $1.3 billion. So that's definitely world class. We'll produce $170 million post-tax, and that's a post-tax NPV, by the way. Post-tax earnings, $170 a year once we're in production. But the other big number to look at there is the operating costs. Now, put this in US dollars, because that's generally the way that HPA is priced. And we believe that we can produce HPA for $4,000 a tonne or less. And that's really where the value proposition comes from. So we have heard that it has been a bad market. 2018 was also a pretty tough time for 12 months in through there. Share price has come back a bit, but since we released the scoping study, which is in November, we were around about 1 cent. We're now at 1.4, 1.5. We're up 40 or 50% since that time compared to much of the rest of the market. We have come back quite a bit since we did a capital raise. That's not to be unexpected. Capital raise is very successful, raised $3 million, of which $2 million went to 3 of our top 10 shareholders, which are a very fantastic outcome. So market cap's around about 50 million. I mentioned that the NPV is 1.3 billion. And so my job over the next couple of years is to drive the value of this company from 50 to over $1 billion. And that's going to give you something in the order of a 30 to 25 times your return on your money as we move this thing towards development over the next few years. So it is time to look at the numbers and get on board in the journey. And the thing that's going to drive that value is this low cost of production. So this is a graph that's called the cost curve analysis, and we sort of jumped into the future a little bit, and we're imagining that the current producers, who are the Chinese and the Japanese, shown here on the left, got about 50% of the market, and there's other players, in particular Alpha HPA, A4N is their code, and we'll talk about them. This is their cost of production on this side and through here, and the incumbent producers make their HPA from basically mining aluminium oxide as bauxite. It goes through a very environmentally energy-intensive process to produce aluminium metal, and then they convert that to alumina. It's a cost-intensive and energy-unfriendly and environmentally unfriendly process. Alpha HPA have been very successful with a hydrometallurgical approach, and we're doing the same thing. Alpha's costs are about so the cost of input in through here is about 15 to 20,000 US dollars a tonne. Alpha are producing at 7,000 or more, and we believe that we can produce at 4,000. So when you're in the industrial mineral space, which is what HPA is, same as kaolin, same as coal, same as iron ore, a few things have got to be true. You've got to have a large deposit. You better have some high grade, you've got to have established customer relationships, or very importantly, you've got to be one of, if not the lowest cost producer, otherwise you won't get through the mining cycle. So when I first saw this project, because as a young man we were kind of warned off industrial minerals, it was like, oh, this is going to be a very low cost producer, and our scoping study indicated that we could be one of, if not the lowest producer by a significant margin. That's going to give us a huge commercial advantage when we start marketing this material. So other uses of HPA, or if you've all been down to Harvey Norman, OLEDs, ULEDs, micro LEDs, they've all got HPA in them. All the light globes got HPA in them for LEDs, and increasingly sapphire glass in multiple uses, but in particular on your smartphones and tablets, etc. Lots of growing areas in through there. Iggy did mention the separators. They're made of HPA in the lithium-ion battery space and will be used in the ceramics, in the sodium-ion batteries. It stops the thermal runaway. Iggy showed you the Tesla fires catching on the Tesla cars catching on fire. This is a Samsung phone, which if you recall was also exploding, and that's because the separator wasn't made very well. That's what the HPA is. It stops the thermal runaway, and obviously growing demand there. So this is a supply and demand graph for over the next sort of 8 to 10 years. Demand shown above in through here, and the big thing is in through here is in the blue. This is the LED market. That's the one we're going to be aiming for mostly, and in the light blue is the HPA. Is the battery separator market. And around about 2026, forecasting a bit of a drop-off in supply, mainly because of offshoring from China, who are the biggest producers, and obviously supply security driven out of Europe and the US. So what is it worth? So if we can produce it at $4,000 a tonne, the average price for 4N, which is 99.99% pure, we shorten that 4 nines or 4N, is somewhere in the order of 15 to 20,000 US dollars a tonne. Some of the recent products that Alpha have put out are sort of well north of that, sort of $30,000 a tonne. And it's importantly, there's also significant markets in 3N, not quite as pure, and this is where the volume is in the market. There are some extreme margins to be made in the very high purity material, but they're generally low volume, and you can't build a business out of that. But you can imagine if we're selling at 25,000 US dollars a tonne and we're mining it at and operating at 4,000, the potential for significant revenues exists there. And how much alumina do we have? I've shortened this. We've basically got nearly 1 million tonnes of alumina. Times that by 20,000 US dollars a tonne gives you the figure of about 20 billion US dollars in ground value in the top 2 metres of that salt lake in Lake Hope. Where is it? It's 500 kilometres east of Perth, in the middle of nowhere, which is a great place to be. And here are the 2 salt pans. It's the dry lakes. There's salt lakes and a special set of minerals in there formed by evaporation. The rainwaters come in, drop sulphur from the ocean and mix with the material weathered from the granites there, and it's precipitated this incredible clay in those 2 lakes. And there's a natural advantage, man-made advantage there. There's actually a road that goes right up to the side of these lakes. It's almost an inbuilt haul road, which will save us significant cost savings on clearing. And this is Roland Gotthard. This is how he discovered the deposit. We can talk about that at lunch. And this is how we drilled out $20 billion US worth of material. It was with a rubber mallet and a 2 metre plastic push tube for a total cost of 60,000 Australian dollars. So that is going to be the best return on a drill program that you're ever going to see in a mining company. And this is what it comes out looking like. It looks like plasticine. And very naturally, it's 1 micron or less in size. And this offers, again, huge advantages as we move forward. And this is what it looks like in terms of the grade. There's a high-grade centre, and this is the east pit, basically enough here for a 10 to 15-year starter pit. And all we're going to do is drive off the side of the lake in through here. We're going to stockpile 3 years' worth of material, and then we're going to truck it off-site. So there'll be no on-site processing. So this is where the huge advantages come for the costs to produce this HPA. Is that there's no drilling, blasting, grinding, there's no on-site beneficiation, we don't need water, we don't need permanent accommodation, it's going to be campaign mining, and importantly, we're only going to leave a hole in the ground that's probably only going to be 1 to 2 metres deep max, and test pits that we've done already are already filling in. So this thing is actually almost still forming, so literally the natural renewable resource, and the clay's swell, and so we're going to leave very minimal environmental long-term footprint here. So that's a huge liability off our shoulders. As well as environment, we've already, the flora and fauna surveys, all positive on the lake. There are no threatened species or priority species there. So no impediments to mining on the lake, a bit more work to do around the lake, but nothing that will stop the mining. And very importantly, we've already had the lake surface cleared for heritage by the Naju people. We're now in discussions with the Naju to move towards an agreement that will allow us to mine on their land, and they're the traditional custodians, and we thank them for the participation in all of the work that we've done so far. I don't think this is actually going to be a difficult negotiation. They're very keen to talk to us, we're very keen to talk to them, and I don't see any impediments to getting that agreement signed over the next 12 months. And that will lead to a very quick granting of the mining lease. That's our sole focus in through here, is to get the mining lease granted as quickly as possible. I won't dwell too much, but the unique nature of those minerals also means that when we take them to no crushing grinding, as I mentioned, when we take it to the process plant, we can just take the clay and we just drop it into the reagent. And because it's nanometer in size, that actually gives you an infinite surface area. For those of you who can remember physics from 20, 30, 40, 50, sometimes 60 years ago, it gives you an infinite surface area. And so when it goes into the reagents, you just stir it and it goes into solution in around about 15 minutes. It's an amazing thing to watch when you see it. And it's done at 90 degrees, so it's low temperature, and it's going to be a sight to behold. So we announced today that all the work that's been going on as part of the pre-feasibility study, and I likened it is a bit like a jigsaw puzzle. We've been working incredibly hard, lots of balls in the air, and those things are going to land in our hands over the next 5 months as we move towards finishing the PFS. So at the mine site, as I mentioned, we've been in discussions with the Naju. We'll be lodging our mining lease application within the next couple of weeks, and that's basically set then. We'll just go through the approvals process. In the process plant, we are looking at some ground in Kwinana, and amazingly enough, we have found providers of the reagents that we need, and also buyers of the offtake, of the byproducts from the process right at Kwinana. It's going to save us huge amounts of capex and opex. And we did the scoping study on Kalgoorlie. The logistics were just too difficult. We're going to go to Kwinana. It's a 500 kilometre truck, but that's marginal extra cost. So we've got a lot of test work going on at the moment, looking at what products we can produce. We recently produced a very interesting nano-scale crystalline alumina hydrate, which has got probably significant uses in the catalyst business and the flame retardant business, and we're looking into the commercial possibilities of that, as well as high purity alumina. And then most importantly, when you're in the industrial space, it is all about the offtake. We're in discussions with a couple of potential partners in Europe and the US, existing alumina businesses, to see if there's any synergies there. We have received some very interesting offers from potential clients already. But what I will say is, if we look at Alpha HPA, and that's probably a good time to look at it in through here. This is their share price graph. 4 or 5 years ago, Alpha HPA, similar to us, they were called Kohlrabi Cobalt at the time, came across a process for making HPA. Their market cap in that time went from $20 million to $1 billion. They are the leaders in the space. Many have tried, most have failed in the HPA space. We believe that we're second behind them now, and we'll be catching up with them. And so if you don't believe that we can get to $1 billion, if you look at Alpha HPA, they've got there, and in fact Bell Potter have got a $2 billion valuation on them once they get into full-scale production. So Alpha have quite clearly shown that if we build it, they will come. They recently got $400 million of low-interest loans from the Australian government because they're obviously very supportive of critical minerals. HPA is a critical mineral, and also downstream processing. And Alpha indicated they're going to build a 10,000 tonne per annum plant, as we plan to. They've indicated base demand for at least 30,000 tonnes. And so I have no problem that we were going to find customers for the product. So this is Impact, where we sit right now. Obviously, share price has come back a bit. It's a great time to be buying. We've got good money in the bank from the raise that we did recently, and we've got very strong support from a family office in Dusseldorf. We've been on the register now for 10 years, and in the last 18 months, they put $4 million into the company and been buying on market. And an ABC is a subsidiary of a listed investment vehicle, Deutsche Börse, which invests in about 50 or 60 Australian companies. Huge support from the Germans there. So look, going forward, big aim for this year is completing the pre-feasibility study. We're optimising the test work. We're going to start to get material into the hands of customers, and very importantly, we're looking at a pilot plant, and there'll be some news for that coming up shortly. Roll through into a DFS, get the mining approvals in 2025, and hopefully get into small-scale production with a demonstration plant in 2026. So I'm inviting you to come on the journey with us. It's going to be over the next 2 to 3 years. You've seen that there's potentially significant, huge upside in the share price. It's a great time to be looking at us. We're going to be delivering into a high margin, high growth market around about 2026, which, if you recall, was when the supply deficit was going to be kicking in. And you should follow this journey, and you should sign up to our Investor Hub. That's our story. Thank you very much for listening. Here for questions.